Welcome to another edition of ETF Central. My name is Bilal Little, and I'm really excited about today's guest. We have Joyee Yang. She's a content creator as well as financial educator for Gen Z. She's phenomenal because she has 300,000 followers across all of her social platforms, and she's here to tell us a little bit about her investing journey as well as how she's researching and investing in ETFs. So stay tuned, really excited. Joyee, welcome to the show.
Thank you so much for having me.
Yeah, excited to have you.
So exciting.
How was your trip in?
Very good. I just flew in this morning.
Okay.
Smooth ride.
First time at the exchange?
First time ever at the exchange, even like on the street, really.
I love it. I love it. There's a magical feeling every time. And you're here actually on a really good day.
Yeah.
IPO day.
Yes, IPO, StubHub.
Yeah, absolutely.
Everyone's going crazy.
I love it. I love it. Look, today I really think it's important that we get a better sense of not only the retail investor, but how people start their journey in investing. So for those of you that don't know you, tell people a little bit about Joyee Yang and how she got her start in investing.
Yeah, well, I was actually kicked out of my parents' house at 19.
Okay.
And so, 19-year-old Joyee was Googling how to make money online.
Okay.
And dividend stocks came up. And so I invested like maybe $100 or $200 into Fortis and got a dividend of like 69 cents when I woke up the next morning, and I thought I had like escaped the matrix. I was like, holy crap, making money while you sleep is actually true. And so I was just like hooked from that point. I was doing so much research on dividend stocks, how to optimize my portfolio, but also how to stay safe as well and manage risk, because I am a 19-year-old living out on her own. So, yeah.
Okay. So what were you doing to actually make money to start your investment journey?
Ooh, a good question. I actually had 3 jobs. So from 8 in the morning to 5 to 5:30, I worked as a court clerk in Ontario.
Okay.
So I was in law for a bit, and then from 5 to like 12 a.m., I was actually a server.
Wow.
Yes, I was a server. That was my favorite job ever. And then on the weekends, I would be a freelance bartender.
Okay.
So whenever someone had events in my area, I would bartend, just to make some extra cash. I lived on my government salary.
Okay.
And then invested the rest of the money from serving and bartending into the stock market.
I love it. I love it. So you started with dividends, and that was like, okay, that's where, how do I make mailbox money? And then how did you transition and say, you know what, these ETF things are real? When did you first identify that ETFs were important to you?
Well, yeah, like I said, I was planning to manage risk. I was super risk averse, first of all. I didn't want to lose a single dollar because, like I work like 15-hour days and money means a lot to me.
Yeah, absolutely.
And so, so I was trying to make as much money as possible and basically not lose any money. And so, I watched a lot of YouTube videos. I used Google, I used YouTube, and then watched some finance influencers on YouTube as well. And they all said, instead of just buying individual stocks where you're putting all of your eggs in one basket, just buy an ETF where, it's just a basket of stocks all in one.
And you get the broad diversification.
Exactly.
So look, let's take a step back before we dive into like some of the investment stuff, and tell me a little bit more about your demographic, because you're 27 now, right?
Yes.
Tell me a little bit more about your demographic and how you're trying to educate people, because to your point, you said, okay, I'm going to YouTube to find the information. For you, and I would say probably a lot of your peers, a lot of people go to YouTube to find information, opposed to going to traditional financial asset managers who actually produce a lot of content. It seems like you feel more comfortable and confident going to content creators that simplify the message. Is that fair to say?
That is, you hit the nail on the head. Finance and advisors in my bank, I actually opened my first investment account at one of the big banks.
Okay.
And they didn't really tell me anything. They didn't even tell me that I needed to invest. And so, my perception of financial advisors were kind of tarnished since I was 18.
Oh, wow.
And so
Well, hold on, lean into that. Why was it tarnished?
well, I would just never got any information about investing.
Okay.
And usually when I do talk to the advisors, they do sell mutual funds,
Okay.
which has high management fees.
Okay.
And I just thought, 19-year-old Joyee thought I could do it better.
Yeah.
And so I just did all the research myself.
Okay.
And then, found out that, some financial advisors do want to sell you products where they could make the most money out of you. So,
Yeah. And so you felt more comfortable looking to content creators to build like trust and
exactly. So
explaining what the
YouTube.
products were, or like, yeah.
Exactly. So YouTube videos are free. I couldn't even afford, like $100 session with a financial advisor. So yeah, YouTube was free. And a lot of the YouTubers that I watch actually was bold enough to share their portfolios online. And so that transparency really it just had the energy of like drawing me in and really trusting them.
Yeah.
So yeah.
So you built trust, you built transparency. There's a level of authenticity there. What other sort of resources did you use to build your financial foundation, right? So you listed YouTube. Where else were you going to look for information? Obviously Google, but where else?
Yeah, definitely Google, Yahoo Finance. I actually have the CNBC app.
Okay.
And there was like Twitter back then. That was what it was called, Twitter. And then there's a lot of new, I guess. There are a lot of new research platforms now.
Yeah.
Blossom is one of them, Blossom Social.
Yeah.
And I checked out ETF Central. The comparison that you guys have on there is really good.
Yeah.
And so you just do a lot of research in the beginning before you purchase any ETFs. And then once you do the research, you're kind of like locked in for hopefully 15, 20 years.
Yeah.
So yeah.
Now talk a little bit about your peers that are doing their own research. Like, what are you guys talking about? How are you guys sharing information to grow together and almost build this communal experience?
Yeah, well, honestly, whenever I buy and sell a stock, it's on Blossom.
Okay.
And I also make videos on it. So when you say peers, I don't know, I just have like one-on-ones with my friends.
Yeah.
But my peers are other finance influencers.
Okay.
But we share it on Blossom. We make videos on it. I'm always finding out, new ETFs or new stocks that are just IPOing from my finance influencer friends.
What would you say the mix of your portfolio holdings are between individual stocks and ETFs?
Well, I am 27, so still kind of young.
Yeah, it's fine.
I think right now it's 50-50.
Okay.
50% in ETFs, and then the other in individual stocks.
Where would you say your risk tolerance is today? If a scale 1 to 10, 10 being the riskiest.
I think 6 or 7.
Okay, 6 or 7.
6 or 7. The reason why it's 6 or 7 is because when I was younger, I made a mistake of being too risk averse.
Okay.
And so I saved all of my money in cash.
Okay.
In envelopes.
Okay.
Because I was serving. So in envelopes, and I didn't even put it in a high interest savings account. I didn't even put it in like a broad market ETF. I was just that risk averse. And so the more I learn about investing, the more risk I'm willing to take. The more I understand a concept, like the stock market, the more money I'm willing to put in. So, yeah.
I tell everyone, especially if they start investing like early, it's like time in the markets, not trying to time the markets, and understand like risk isn't bad or good, it just is. And you have to understand it's inherent to investing, right? So no problem with that. I totally understand it. So look, I want to switch gears a little bit and get a sense of right now, how are your conversations going with your friends and your peers? Because you've built a pretty significant following yourself. So you went from following and recording or researching videos on YouTube to now creating your own. And you're getting some really good traction. So across your social platforms, you got 300,000 followers of people looking to you as now the financial expert and or educator. How has that transition been for you?
I realized that when I was watching YouTube videos, it was educating me. But nowadays, when I make YouTube videos, I'm not like a therapist, but I am managing people's like psychology when it comes to investing, because there's fear, there's greed, etc. in the market. And so I try to educate as much as I can, but I think my number one priority is letting people know that, stock market crashes happen, your portfolio will go up and down a lot. And so, yeah, I created a lot of videos telling people my strategy, which is dollar cost averaging, which takes like the mental part out of investing. And yeah, they seem to appreciate that.
So what would you say your number one lesson or money lesson is? Is it dollar cost averaging to remove the emotional aspect of investing?
Yeah, dollar cost averaging and automating your investments, for sure. It's just like, as soon as your paycheck comes in, you're putting away 20, 30, 40% maybe if you're still living at home with your parents maybe.
Yeah.
And then, just letting it work in the background for you. I try not to check my portfolio too much. So
it's because of the emotional rush that you get, right?
Exactly. And you know what? For beginner investors, which is a lot of my audience, they will check the stock market basically like 18 times a day. Yeah. And they would ask me, should I sell this or should I sell that? And and I tell them, when I first invested in the stock market at 19, I didn't sell any stocks until I bought a condo at 23. So there's 4 years of me, staying calm through the pandemic as well. Yeah. And so, yeah.
No, I get it. So because you have this new audience, what are they gravitating towards more? Is it ETFs? Is it stocks? Like, where do you see the most engagement from the content that you create?
Yeah, I think it's very, very dynamic. Okay. I mean, with my audience being such beginner investors, they might only get into ETFs because they found me first on social media. Or they're only starting to invest now because they heard about Bitcoin, or they heard a friend that invested in this one company that like 100x or something. And so there's a lot of people that come from like different backgrounds, I guess, and like different ways how they got introduced to the stock market or investing. And so they're kind of like all over the place. But a lot of people, especially Gen Zs and younger, is in the mindset of how do I make money and how do I make it fast. So they're very prone to taking on risk nowadays.
What tools do you think? What tools would you like to see more of? Like right now, one of the things, I'm gonna give you some kind of context here. My biggest challenge with the industry has been we don't speak in the context of a portfolio. We talk about individual positions, like, hey, buy this or buy that or sell this or buy that or whatever it is. We don't actually give people the context. Most people have never built a portfolio in their life, so they don't understand standard deviation or true aspects of diversification, meaning when something zigs, you need something to zag. What tools would help your investor base in this environment today if you said there's one thing that we need more of?
Honestly, if I can build like an app or a website where I direct all the traffic on this website, is maybe like an online kind of automated financial advisor that's free, where you can put in your age, you put in like how much money you can put away, what your goals are, your time horizon, etc. And maybe have points that they can research. So not, hey, open this account and invest this much. It's do some research in this and do some research in that and kind of still build it out yourself. You kind of want to teach a man to fish instead of giving a man a fish. You know what I mean?
Yeah, absolutely.
Yeah. So, yeah, if there's like a website like that somewhere, I think it'll be really helpful to my audience.
Okay. So I like this. Now I want to go to what content do you envision yourself creating related to that? Would you say, I'm going to create videos on 529 plans for people who want to manage money for their children. I'm going to create, balanced portfolios, for people who want to better understand diversification. I want to create videos on risk and what ways to measure risk in a portfolio or a position. What videos do you envision yourself creating if you had your crystal ball?
Well, I would create a course.
Okay.
Where I talk about all of that, right? I talk about what investment vehicles are riskiest and put it on a spectrum, maybe,
Okay.
where they could fully visualize, okay, if I have this much money, how much am I going to allocate towards like a high yield savings account or like an individual stock or like an ETF?
Yeah.
I think in the future, I just want to be fully transparent with financial literacy.
Okay.
No gatekeeping, no explaining things to a beginner as if they understand literacy at first. Because when I was watching YouTube videos when I was 19, even a 20-minute video took me an hour to watch because I had to pause every like 5 minutes, go into Google and search up what is a dividend, what is a capital gain, what is a PE ratio. So like when I talk to my audience, I really try to talk to the 19-year-old version of myself.
Okay. I like that.
Yeah.
So now let me switch gears a little bit because you work with asset managers in Canada today.
ETF providers.
ETF providers, right? And when you're creating content with some of those ETF providers, what are they asking you to communicate about their product, or how are they asking you to position their strategies?
Yeah, well, before I work with any ETF providers, I like dive into what you guys are doing, how this will benefit someone, or like who would buy these ETFs or I guess stocks now. And they tell me that they usually work with me when they're just releasing new products and they want people to kind of know that it's there.
Okay.
So if people are
awareness.
Yeah, exactly, awareness, eyeballs on the ETF. When people are looking for monthly income, there are covered call ETFs that the companies will ask me to present to my audience, and my audience is 18 to like 55.
Okay.
And so I have like,
men or women?
It's 50-50.
Okay.
Yeah. Actually, I think more women.
Okay.
More women, like 60-40. But it's just to get awareness on the ETFs that they've just launched or whatever.
And how many asset managers have you worked with in the past?
I think 3 or 4.
Okay.
Yeah.
And are they mostly equity positions? Are they crypto? What are they?
They're mostly like covered calls.
Okay, so income.
Income focused, yeah.
Okay. I have to ask, given your audience, what's the engagement like on crypto ETFs?
Crypto ETFs, I have not done too much on because I've just started getting into crypto very recently.
Okay.
Crypto was like a speculative thing overall. I don't even, it's
Rightfully
not a
so.
stock, it's just a thing.
Yeah.
And so I didn't understand anything about it and I wouldn't invest too much money in something I don't understand.
Yeah.
But yeah, my audience now with all the evidence that it's going to become the next big thing, like US I think was putting some crypto in their pension or trust fund. When those news comes out, I do get a lot of DMs.
Yeah. Look, the institutional adoption of crypto is changing the entire landscape. And the more that you see that, I think you also build trust, because with the retail public, it seems as though when a large institution has done their due diligence, then it might be appropriate for me to really pay attention to this, right? They have more resources, they have more insight. So now you get the investor public that follows behind. And that's okay. Call it a natural adoption curve once you see that adoption from the institutions.
Exactly. That's where I get my trust from too, right? Like you guys do your research and you're investing in this, I might research myself and make sure that it's a right investment for me, because as someone who's not married, doesn't have kids, rent isn't that high, I could risk a little bit more in that space. But if you're like, if you have kids, you have a mortgage, car payments, etc., and not too much money to play around with, I would just do my own research.
Okay.
Do more research.
So I like this. I want to get, as we sort of come to wrap this up, a little bit about how you want people to think about Joyee and where she's going as this content creator and investor, because right now you're building your own audience, you're building your own platform, you want to see more from the industry around good education. How do you see yourself fitting into the context of tying big institutional news to a nascent retail audience?
Where I want my content to go is, if a person wants to start investing, they start with me.
Okay.
They start with my content. I want to give them enough information where if they watch podcasts as sophisticated as yours, they would understand what you're talking about, because it really is like another language.
Yeah, absolutely.
So that is where I see myself going. I would love to just get more eyeballs on my content. I would love to change the minds of people who think investing is a scam and convert them into thinking investing is going to help you in the future.
Yeah.
So
Absolutely.
Yeah.
What can we be doing as an industry, meaning folks in my seat, to actually collaborate, work with you guys, but also build resources and content that would be valuable to you?
I think the podcast we're doing now is valuable.
Okay.
I think that anyone who's a beginner investor tunes into this would understand what we're talking about, can understand where I'm coming from, can relate to my situation. And so, yeah, the more, I guess, people you talk to who can communicate the finance world in like layman terms.
Yeah, simplify the message, yeah.
I think that would be very, very helpful.
Okay.
Yeah.
All right, I love it. Joyee, any questions for me?
No. Thanks for having me.
Thank you for coming.
That was so fun.